2 here of the Cummins Real Estate Group show with Michele Cummins and myself, Curtis Pope. And I know you gave a quick introduction there, but I know you're world famous for your introductions, Michele. So why don't you give an intro to our guest?
We have here for our listeners Linda Meadley, and she is with the Cooperators, and she was born and raised in Alberta. And we were talking about this actually off air a little bit here before the show. I love Alberta. You know, it's a heartland. Love it. Anyways, she transferred her job to BC to make her home here. And she's been with the Cooperators for 6 years. That's as long as I've been with Remax, actually. And her background is in banking and finance. She loves what she does, and she loves educating people. I've seen this firsthand. And she loves educating them on all sorts of investments and all that, but also how the biggest thing is protect themselves and their loved ones. And she loves the outdoors and being creative. That's a lot we have kindred spirit in. And she has great reviews online if you look her name up in the Cooperators. And she has a really neat Facebook, business Facebook page and a Twitter. She actually gives really great advice on there. I'm always liking and reading them. And so anyways, without any further ado, we welcome Linda Meadley to our show.
Hello, everybody, and thank you, Michele. I'm so happy to be here with you.
Thank you for coming on. And I wanted to ask you the first question because Curtis and I were like, he has questions, I have questions, and I'm like, oh, we're going to ask the first one. So my first question to you is, do you have to buy the creditor insurance from the bank on your mortgage?
That's a great question. We come up with this a lot because the bank is always going to offer you their creditor protection when you buy the mortgage, but you don't have to take it. We have a great product, and the difference there are some differences between doing creditor insurance and our insurance. When you do a proper life insurance policy, we do the underwriting up front. On creditor insurance, they do the underwriting at time of claim. So there can be some discrepancy there. We also have a level amount. So the amount that you purchase is going to stay the same throughout the term. And we like to match up our term insurance along with the amortization of the mortgage. So it's there and it's going to protect you fully. We also, your premiums will never change through that entire time. The challenge with creditor insurance is that every time your mortgage does come up for renewal, you're going to have to renegotiate that life insurance piece on the mortgage. So you can look at increasing payments or even a possibility that you don't qualify medically for it. So by keeping the level amount, you are the owner of the policy when you do it with us. Your payments will never change. It gives you some real good stability, knowing what your payments are going to be in the future. Also, it's fully portable. So because we do the life insurance on an individual rather than on the home, you can actually sell your home. And by the way, incredible stats there that you gave us. So, you know, it might be a really good time to sell and relocate. And you can do that without it affecting your life insurance policy and still have the protection in place without increasing your payments. You don't have to ever renew it until until the term is up. And yeah, so there's some really great things. Another really big benefit is that because the amount stays the same, so if you buy $1 million, you're going to get $1 million, even if your mortgage balance decreases. So when you do the creditor insurance with the bank, they're just going to pay out the outstanding mortgage, and there's not going to be anything left for your family. When you do more, the insurance with us, we're going to be able to provide you with that full payment. And then your spouse will be able to pay off the mortgage and keep the difference. So there's, some great benefits.
What I love about Cooperators too, and you explain it better than me, so maybe you can share quickly what's different with the Cooperators than other insurance companies.
Well, we are 100% Canadian owned. We've been around for over 75 years. We are a true cooperative, so we really do care about our people before profit. And we're very community minded. And we're an agent as opposed to a broker, so everything is in-house. We have all of the expertise at our fingertips. We can walk you through the claims. We're not passing you off to another company. Everything is within us from start to finish.
That's very, very cool that you're kind of a one-stop shop that way. Now, this is one I've always, heard people ask. Now, why do I need life insurance when buying a home? I'm young, I'm healthy. Why do I need to buy life insurance?
Yeah, another great question, and one that I come up across quite often. So your mortgage is your largest asset that you're buying, and it's also going to be your biggest debt. We buy insurance all the time. You buy an iPhone for $1,500, we're getting the Apple Care for it. It makes sense to protect that investment. Most couples both have to qualify for the mortgage as well. And what people don't realize is you've entered into a legal contract. And if one of you dies, that contract is actually broken. And the bank can not renew your mortgage. They can call the mortgage. And then you could be in a position where you're forced to sell when you're still grieving for a lost spouse. By having protection that's going to take care of that, you're able to clear off that debt and at least not have the financial worry of what's going to happen to your home when you're still grieving, and allows you to grieve properly.
That makes perfect sense. And a lot of people don't know, and so I wanted to ask about, when they move, how does it affect their life insurance policy? You mentioned a bit earlier, but what do they do? How does it affect them?
Yeah, it's great. It does not change at all, which is the great thing. So life insurance rates are based on risk. So the older you get, the higher your risk is just naturally, and your health. So when you're young and you're healthy, your rates are going to be low, and you can lock in for a long period of time. You can, by locking in those rates, you're going to take advantage of those rates and being able to secure your financial situation.
So what difference is there between, say, having a term and a permanent life insurance plan?
So life insurance does have a couple of different options. You have term insurance and you have permanent insurance. And term insurance, think of it like a car loan. It has a specific length of time, 10, 20, 30 years. And after that, it's over. It's meant to cover temporary things like a loan, your mortgage, child education, cover for a temporary period of time. Permanent insurance is in place for your entire life. So it's there anytime. It's a guaranteed payout because at some point we are going to die.
Yeah, we talked about a couple shows ago, right, Curtis? And Curtis was like, I'm never going to die.
Speak for yourself. I'm going to live forever. I got plans.
Yeah, right. And it's great. Most financial plans will have a combination of the two. Have one that takes you right through life and have one that covers your bulk of your finances at your during your most at-risk years, right?
What are the advantages of working with a financial advisor like yourself, Linda?
Oh, that's great. So what we do as a financial advisor, we look at your big picture, not just one piece, not just your mortgage. We look at the big piece of the puzzle. We look at your whole financial situation, and we're going to sit down with you and we're going to put together what's called a needs analysis and really come up and determine what is the right amount of life insurance to cover what your goals and priorities are. So every time I meet with a client, it is really client-centric and it's client-focused. So what do they want to accomplish with the life insurance? What's most important to them? We're able to put a detailed report together with them with a recommendation of the amount of life insurance that it covers. So we're looking at not just covering the mortgage, but we're looking at income replacement. Is there children? Is there donations that they want to make on their death? And covering the big picture up into retirement. We also work with them and look at their financial needs and making sure that they're on track for retirement. And so your bank is going to give you creditor insurance that's just taking care of your mortgage with nothing extra. And we're going to look at the big picture and put a proper plan in place that's going to really protect you and your family.
Thank you so much, Linda, for all this information. That was a lot of information, actually, and I know there's so much more education as you love to give people knowledge and wisdom. And so I wish we had more time, but we will definitely have to have you back. And if anybody wants to get a hold of Linda and ask her more questions, feel free to contact me at michellecummins.ca or in any way of my contacts, and I can connect you with her very easily. Thank you, Linda.
Thank you so much, Michelle, and thank you, Curtis.
Thank you.